What's your view on exchanges and your roles in developing these?
So I believe that exchanges will still remain the main on-ramp for especially certain retail level. I do believe that sort of centralized payment will dominate certainly for a lot of first-time beginners, and I think for a lot of regulated, truly like institutional investors, they still prefer to kind of face a centralized exchange for their liquidity needs. The middle part is the DeFi, decentralized exchanges, and I think that's probably where a lot of the growth potential is. But for the most part, I think they'll remain a key part of the crypto infrastructure for years and years to come.
And we've seen a lot of institutional participation and adoption over the past couple of years. Do you think the recent bout of volatility that we've seen, not just in digital assets, but across the board, are you seeing any pullback because of that?
Not yet, but I think the jury's still out. So from an investment perspective, I think investors are still going to be interested in doing it. The key question are the big banks, right? They've announced so many initiatives and pilots, and they want to do this, that I'm a little bit skeptical as to whether or not some of them will continue the effort if the demand from the client side dries up for any period of time. We saw in 2017 a lot of banks say, we're going to do this, we're going to do this, and then we saw the bear market in 2018, right? Everyone pulled back. So is it going to be different this time around? Time will tell, but I do think there will be some banks that actually care about the ecosystem and kind of the future of the asset class that will stick around.
Right. And New York passed a moratorium on mining just recently. What's your take on that?
It's an unfortunate event that we've seen. I think certainly Genesis being headquartered in New York City, we've always tried to kind of champion New York as a crypto capital of the world, and as an extension of kind of the Wall Street money that's always kind of been there in the institutional capital. But certainly kind of the issues regarding, how the bit license has been framed, as well as kind of the latest, the mining moratorium for the next 2 years, certainly makes it harder, I think, to kind of sell New York as an innovative, crypto-friendly state. So we still have a lot of work to do, I think, to kind of work with our regulators and our legislators, frankly, on the education side to turn things around. But for the moment, I think it is certainly a setback for the state as it seeks to become a more crypto-friendly place.
Yeah, I mean, we see the vibe in Miami, we see the vibe in Austin. It certainly is different than what we're seeing in New York. What words of advice would you give institutions that are still thinking about getting into the ecosystem?
So to me, this is for Genesis, this is now our third or fourth bear market. We've been doing this for almost 10 years on the trading crypto side. And so we've seen this play out before where everyone gets excited and then the bear market hits and things kind of cool. I do think it's important for entrepreneurs to understand that the time to build is right now. Right. Because the next bull market, in my view, is going to be the biggest one that we've ever seen. And it's too late if you actually start building in the bull market, right? Yeah. You're way too busy. Customer demand is going to be overwhelming. And I think now is when you actually have to make the hard decisions to continue to invest, hire talent, train them, and really build your platform so that you are ready for the next bull market.
Yeah, that's a great point, Michael. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.